Okay, so I've been hearing some talk in the media about, you know, people should invest in quantum computing stocks, um, because quantum computing is going to be huge and big. Well, it will be, but it's not real big and huge right now. But within the next 3 to 5 years, it probably will be. And I believe that it will merge with AI. You know, I think AI and quantum computers are going to merge and really take over the world, really be a really, really huge thing. But the three quantum computing stocks that they're really talking about now in the media is Rigetti, IonQ, and I think Qubits. So we're going to take a look at those three quantum computing stocks, okay? We're going to look at the fundamentals and the financials of those companies right now. So we're going to go to Yahoo Finance. Let's see if these companies are good companies to invest in right now. Let's go to Yahoo Finance. We're gonna look at these companies' fundamentals and financials, and you're gonna learn something about how to invest in stocks too. Uh, as a sidebar, by looking at this video or watching this video, you'll learn how to invest in stocks as well. You'll get some insights on how to invest in stocks by looking at the fundamentals of companies. But that's not what this channel is about. This channel is about quantum computers, but you still will learn, a valuable thing. Okay, so let's look at Rigetti first, quantum computing company. Let's look at Rigetti. Take a look at that. We're gonna take a look at three quantum computing stocks that people think are gonna be great in the future when quantum computing takes off. I say let's look at the financials for Rigetti. We'll take a look at that. Okay, so we're at Yahoo Finance. We're gonna look at the fundamentals. Okay, so their total revenue last year for 2024. Now remember, these are all numbers in thousands, so you have to times this number by 1,000, and that's the real number. You gotta times this number by 1,000. So really, this is 10 million. All right. So they made 10 million in total revenue last year. All the way up to December 31st, 2024. This is annual. They made 10 million, and that's gross. That's not net income. That's gross. They made in net income last year. They made minus 200 million, $200 million. All right. They made minus $200 million in net income. So they lost a lot of money. The year before that, they lost minus 75 million. All right. See net income. And then the year before that, they lost minus 71 million. So that's not good, right? Now let's look at their balance sheet. We're getting the annual. Like I said, remember you got to times whatever number you see here by 1,000. That's just how Yahoo Finance has it set up. I don't know why, but you have to times it by 1,000, and that's what they made, or that's what they lost, or whatever. Their total assets last year, 284 million. Total liabilities, 158 million. So that's good. That's very good. That's very good. They had total debt 8.8 million last year, so that's a good balance sheet. They had total assets 284 million, total liabilities 158 million, and they only have a debt of 8 million last year. That's excellent. That's an A plus. That's a great balance sheet. Now the cash flow. Let's look at the cash flow. They had last year minus 61 million in free cash flow. Okay, so that's not good, but it's a growing company. It's a growth stock, a small growth stock. So that's not necessarily bad because they have to spend money to grow the company. So you kind of expect that with a small company. So even though this number is bad, that's not a bad thing for a company that's small and growing because they have to put money back into the business. The operating cash flow is at minus 50 million. Same thing, they're a growing company. So that might be in the negative. The investing is in a negative. Same thing. They're trying to grow the company. So those aren't necessarily bad things. Now, as they become established, if you see these numbers, then that's a bad thing. But right now, that's not a bad thing. Let's look at hold on, let's look at what's another company that I said? IonQ. Let's look at IonQ. But overall, with Rigetti, it's probably not a good time to invest in it overall because they're just not profitable. When we looked at the income statement, they're not profitable. And they're nowhere near close to being profitable. Even though the balance sheet is good, the income statement is not good. They're not making a profit. So let's look at IonQ. Let's look at IonQ, the quantum computing company. And let's go to their financials. And I'm going to do one more, then that's going to be it for this video. Their total revenue last year was 43 million, right? That's the gross revenue, not gross profit. Gross profit is the gross revenue, not gross profit. It's gross revenue. The revenue is basically like the total sales, but it's not profit. It's like the total sales they made. Net income, negative 331 million, negative 331 million last year. Year before that, it was negative 157 million. The year before that, so a negative 48 million. So they just are losing money each year, more and more money. That's not a good sign. That's why I say it's not a good time to really invest in quantum computer companies right now. Unless you know what you're doing, unless you know how to invest in stocks, it's not a really good time to invest in quantum computing companies. Balance sheet. Let's look at the balance sheet. Total assets 508 million. But then again, I'm not a financial advisor. Just want to say that. Total assets annual 508 million. Total liabilities 124 million. That's good. That's very good. That's their staff was last year. 508 million total assets, 124 million total liabilities. Total debt 17 million. That's good compared to this. 508 million in assets, 124 million in liabilities, only 17 million in debt. That's an A plus. So the balance sheets for both of these companies are excellent. It's just they're not making any money. They're losing money. They're not profiting. Cash flow last year was the free cash flow, which is basically their savings, is 129 million. That's not as bad, but it's not that bad because, like I said, they're growing the company. The operating cash flow is negative 105 million. That's bad, but like I said, it's not that bad because they're growing the company. So you're gonna have expenses, you're gonna have debt because you're trying to grow the company. It's a growth stock. It's a small growth stock. Investing cash flow 82 million. That's good. They made profits from investing 82 million and financing 41 million. All right, so we're gonna do this last one. We're gonna do qubits. Let's look at qubits. Overall, Rigetti is probably not a good company to invest in unless you get it really, really low, like at like $3, $4, $5. But like I said, I'm not a This isn't financial advice. This is not a financial advice. So let's look at Deep Wave or Qubits. Let's go to their financials. Go to Qubits financials, and we're gonna look at their annual revenue, 8.8 million. And let's look at their total net income is negative 143 million, and it was worse last year and the year before that. Let's look at their balance sheet. And last year, 2024, they balance sheet, they had 199 million in total assets, 137 million in total liabilities. They had 38 million in debt. So their balance sheet is okay. I would give it like a C plus, maybe like a C plus. You know, maybe like a C plus. It doesn't blow you away because the liabilities are almost as much as the assets, and they have about 40 million in total debt. So I give it like a C plus. Cash flow, they got minus 45 million in cash flow last year, and operating cash flow was a negative, but like I said, it's a growing company. Investing cash flow, they had some negative numbers, but it's a small growing company. But like I said, I wouldn't invest in these companies. They're not nowhere near profitability. So you're really taking a big chance investing in these quantum companies right now. You're taking a big risk, But that's it for this video. I hope you got some insight on whether you should invest in quantum computing companies right now. If you do, it's like investing in the lottery. It's like you buying a lottery ticket. The chances, the risk are very high. You have this very high risk if you invest in quantum computing companies right now, especially small ones like this, small growth companies. And I hope you learned something about how to read financial statements, income statements, balance sheets, and cash flow statements. That's a little nugget I gave you. But that's it.